Okay, so today is the first official episode of the 5 Minute Finance Podcast by Blog Now Usage, and I'm your host, Michael Williams. So y'all tap in. Today we're gonna be talking about income taxes. Now, before we get into it, let me start off and say I'm not a hater, not by a long shot. So this podcast ain't for people who gonna do whatever they want with their money, or who already got their money and gonna do and did whatever they wanted to with it. This is for the people who getting this nice piece of change and want to do something different than repeating this same old cycle of having one little come up a year and then never benefiting from it. First off, for all of y'all who have a car, your car is running good, it's running perfectly fine, barely give you any problems, and you think about getting a new one, don't do it. Because for what? What do you need it for? Just to look good? Why would you rather look good or actually be good? It's the difference. All right, so y'all, we need to first understand about negative equity on cars because it's real, and that's why a lot of people will be out here paying $400-$500 car notes on 2016 buckets. Oh, my bad, 2006 buckets. Paying $500 is crazy. My car ain't nothing but a 2014, but it's a sports car, so I'm paying $300, which is fair. But I know somebody who's paying $300 some dollars, almost $400 for a 2006. That's just a regular, just an everyday regular car. Like something's wrong with that picture. So it is because of bad credit or no credit and negative equity, which all we can control if we really knew something about finances, man. So that's why I started this podcast. So I hope y'all understand that I'm really just trying to teach us a better way, because a lot of people will say, a lot of black people will say, we don't really have a blueprint in our community. We all just grow up and we just got to learn. We learn the hard way. We learn through trial and error. So I'm trying to dead that. So I'm hoping, my hope is that a whole bunch of young people listen to this. Younger people, young adults, teenagers who getting ready to get out there in the world, who want to learn before making mistakes so they can avoid the mistake. So let me explain to y'all what negative equity is. Negative equity, especially on cars, is when you owe a certain amount and that amount you owe is less than the trade-in value. So for example, I use small numbers. If you owe $4,000 on your car, but your trade-in value is only $2,000, that's negative equity, because if you trade that car in, you'd still have $2,000 of debt that you would have to account for. So if you go buy a car that's $8,000 when you get your income taxes, instead of paying $8,000 for that car, you're going to pay $10,000 for that car, which is pointless because now you basically getting cheated out your money. So like I said, if your car is good, you might as well just keep it. Another thing I see us do, which ain't bad, is just we could be smarter. I see a lot of people like pay off certain bills, pay like their rent, for example. They'll pay their rent up for a year. Like that's cool, but what are you doing with the extra money every month? You're most likely gonna blow it. If you're gonna pay your rent off, do something positive with the extra money. Not like vacations are cool. Don't get me wrong, because a lot of people, when I have this argument with people, they feel like, oh, I'm telling them not to live their life. All I be trying to tell y'all is get your life set first before you go out and vacation every time you got some free money. So if you're gonna pay off your rent for a year, at least do something that produces income with the extra money. Like, man, it's kids out here with simple bubble gum machines that they own, that they probably cost like $200-$300, or vending machines cost like $500 that you could buy with your tax money, and that gives you a steady stream of income every month. Another thing, man, we could really just pay off credit, like pay a credit down to 9% or 10%, and that will boost your credit score up crazy. You have no idea. My credit is pretty good, and I'm only 24 years old. The biggest thing I could think of doing or saving for with your taxes though is saving for a house. Last year I used my tax money at 23 years old. I used my tax money to buy my first house, and I'm not even hype about it. It's not nothing crazy because I plan on buying more, but I bought my first house at 23 because I was smart with my tax money. So I'm just encouraging y'all to do the same thing. That's it. No hatred, all love. All right, so that's my time for today. Man, I hope y'all enjoyed and got some kind of useful information out of this. Before I go, I'm gonna leave y'all with an African proverb that says, if you want to go fast, go alone. If you want to go far, go together. And I want to go far, so y'all, let's go together. This is marathon, not a sprint. One love.